Welcome to Illuminati Silver. We tell you the truth about silver. Today is Tuesday the 15th of September 2020, and yesterday we published a video entitled Gold and Silver Rise Along with US Equities, where we highlighted that precious metals were generally on the rise, and so too were US equity markets. Now at the time, gold stood at $19.56 and silver at $27.19. Now, the time of producing this podcast, which is 2000 hours GMT plus 1, we can see that gold is currently unchanged compared to that price at $1,956, and silver is marginally higher at $27.23. Now, today's video is going to be very short, as tomorrow is perhaps one or the most important day for us in the precious metals market in terms of economic information. You see that the FOMC of the Federal Reserve will be reporting its interest rate decision, together with any commitments to further QE measures or stimulus recommendations. It's important to remember that it was only a short time ago that Fed Chair Jerome Powell stated that the central bank would tolerate inflation exceeding its target rate of 2% if necessary, as it is viewed the longer term is more important than any short-term blips above this figure, thereby accepting the need to ensure that the US economy does not delve into serious recession or even collapse while ravaged by the economic consequences of the coronavirus crisis. Now, we saw similar comments from the European Central Bank last week, and no doubt we will see similarly from the Bank of England on Thursday, who will also be making a statement. Now, our view is that Jerome Powell, who has frequently stated that the central bank is doing virtually all that it can on the monetary side, and that it's up to the government to decide what to do on the fiscal side and what additional stimulus measures it plans to introduce, will perhaps just stay the course and produce similar rhetoric to that which he produced at the last FOMC meeting and since. Now, of course, we all know that the dispute between Congress and the Senate is such that currently a further stimulus package is yet to be agreed upon, and there is considerable back and forth which could delay such a measure unless some prompt action is taken. And it is this additional stimulus that to some extent we believe Jerome Powell is relying on to keep markets stable. It's also appropriate to remember that the Fed has two jobs: one, to keep prices stable, and two, to maximize employment. For most of the past 10 years, the Fed has maintained a target inflation rate of 2%. That's what they term the Goldilocks number, per their thinking, at least, where prices are stable and the economy can grow without overheating. The trouble was that despite a strong job market before COVID-19, inflation remained stubbornly below the Fed's target. For instance, the so-called core PCE, the Fed's preferred inflation gauge, it basically excludes food and energy prices because they're seen as too volatile, or at least volatile food and energy prices, stood at just 1.6% at the end of 2019, when the economy was considered strong. 3 months earlier, Fed economists predicted the inflation rate would have been 1.8%, so it never actually got to that level. Now, in contrast, for the 12 months ending August 2020, so bringing it more or less up to date, the inflation rate stands at 1.3%, and that was a higher figure compared with 1% the year ending July 2020. And we shall have the next inflation update on the 13th of October, bringing us to the year to end of September. So we're still well short of that targeted 2%. So there's a lot of leeway for inflation to rise without the Fed becoming concerned or worried, and which, frankly, to a large extent, has created a weakness in the dollar because they know that rates are extremely unlikely to be raised for some considerable period. The Fed has said, or hinted, it'll be at least until the end of 2022, if not 2023, and other economists are even predicting as far out as 2025. Now, once the FOMC has produced its announcement, then Jerome Powell will undertake a press conference, and we can expect questions from journalists on what extra steps the central bank will take to support growth. However, policymakers are not expected to change the current guidance in their statement or how long interest rates will stay near zero. Now, officials have said that rates will remain low until the economy has recovered from the pandemic and is on track to meet the Fed's twin goals for employment and price stability. Now, listeners to the channel will recall that even some of the most bullish economists have ruled out a V-shaped recovery and have said that unemployment levels or employment levels will not get back to the pre-COVID days for at least a couple of years, if ever they do at all. So frankly, we're expecting more of the same and a continuance of policy as laid out last month. Now, that said, of course, we have the Bank of Japan and the Bank of England, both due to set policy announcements or make policy announcements on Thursday. And the OECD is scheduled to announce updated economic forecasts for the G20 countries tomorrow. And central bankers in Russia, Brazil, South Africa and Indonesia also meet this week. Now, in addition to this, tomorrow we have US data showing August retail sales. Plus, of course, the weekly jobless claims, which are announced on Thursday, all of which can have an impact. Now, we shall, of course, provide a thorough update, or as thorough as we can, depending how late we stay up tomorrow, because, of course, by the time the Fed chair finishes and we've analysed what's been said, it's likely to be quite late. But we will provide as thorough an update as we can concerning the FOMC meeting and what is actually declared. But meanwhile, an hour or so before US markets close, we've noticed that the Dow is currently up 22 points at 28,015. The S&P 500 index is up 21 at 3,404. And the Nasdaq Composite Index is up 113 at 11,170. Those who follow these markets will know that the Nasdaq particularly was extremely bullish only a couple of weeks ago and then had a reasonable fall. And thus its rise today is really only to be expected. The dollar index has moved from negative territory throughout the course of the day to marginally positive territory and is up some 0.03, so it's minuscule, at 93.03. And crude oil prices have blipped up a little at or around $1 a barrel. So it all seems pretty steady as she goes, at least so far, because everyone is really waiting for tomorrow's announcement, the economic figures, and the weekly jobs report on Thursday. Now, you are, of course, most welcome to share your thoughts on what you envisage may happen in the comment section below. Do you think the Fed will adopt even greater stimulus measures, or will they at least hold their tongue for now and pretend everything is more or less on course? We look forward to hearing your comments. Meanwhile, thank you so much for listening to the channel. If you haven't already done so, please subscribe, not forgetting to press the bell sign so that you're notified of our videos as and when they're published. Some good news also is that, controversially, Greg, his computer is now fixed, and so we can continue with our Richard and Greg channel discussions, which we plan to put out, albeit 2 weeks later than the last episode, on Thursday or Friday latest. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.